Hey folks, Monday 27th of June 2022, and we trundle along in the wake of 75 basis point hike Fed, and of course we have bought the dip, and the market's going up. Now I haven't bought the dip. I did on Friday. Market was quite obviously poised to move on up as it did, and oil as well, taking a nice push to the upside, coming out of quite a tight consolidation zone late last week. But we're waking up to news that Russia has defaulted on its debt. First time since 1918. Nobody paying attention to the fact that in 1998, Long Term Capital Management, LTCM, almost brought down the US economy and had to be bailed out by the Fed. The actual firm had to be bailed out by the Fed. All, of course, starting on a little hiccup on Russian confidence and a default there. So I'm not sure why they're quoting back to 1918 instead of 1998. Anyway, coming back to the markets here, Russia actually has sent that money to clearinghouses in Europe, but those clearinghouses are not sanctioned to clear the money through to the European banks. So technically, yes, they've defaulted because the money has not been deposited to the European banks, but from a more mechanical working point of view, they have sent the money and it is there for the Europeans to take. So, but either which way, here we are. So you're seeing the dollar really not doing much today. Let's get over in the charts and have a look. We're going to look at S&P. We're going to look at oil, and we'll probably look at gold here actually today. So let's get on here and have a look at this S&P. So look at the action here on the 60-minute candles from Friday. Opening drive, bam. Just before we got the opening, we had essentially we had the S&P come in, supported on VWAP. Lovely trade laid up here, confluent with this morning trend. We had we can get rid of the trend either which way. Lovely support at VWAP there. Came in, got some positive data out of the US, and bang, up we go. So really nice supported market there. So if we just go back to just try and pull up, I can't actually pull up Friday data. I think we had positive housing data come out there. Housing sales back on the front foot. So indicative of a positive economy. Today, I think, look, we're a little bit extended up. We've been up about 0.5%, a little more on this market today in Europe. But I think we're set to at least pull back, test the 20 EMA as support here. I'm of two minds. We're going to have a team call about this shortly. But I am a little bit wary of this bid, and I don't know if this thing can go on forever. I do think, in the broader sense, we can get to the 50 EMA up above the 50 exponential daily moving average is way up there, and that's going to be a really positive week for us to get up there. But if we then look out on the structure of the daily bars, right, on the S&P, well, yeah, fine. We're holding above this kind of zone here that we have. If I go actually to weekly, I'm going to do weekly here and tidy this up a wee bit. But you can see there's just a little bit of a zone here from the high of the week of the 16th of Feb to the low of the week of the 22nd of March 2021. So, fine, we could probably get rid of this area, but either which way, what I'm looking to happen here on these markets is for us to get back to the 50 as we did here, and then the selling on the bear market recommences. So until then, I think we're on the front foot. Stay with those nachos loaded. The dip has been bought. So yeah, back to the 50 EMA 4039s. Obviously not in one straight line, but on the weekly bars it may well be. So that's something to note there on the S&P as we go into today's session. We're going to get core durable goods orders for May month on month in about 15 minutes here. So we're going to be sweet and quick. Let's look at the NASDAQ, which has been sort of lagging in performance as we've bid back on up here. It's kind of been in the middle of nowhere where it kind of bottomed out. and is now turning back up. But I think it's got a lot of problems once it gets back up into the 12,701s area here. This is a big sort of interesting area to be long or short this market, and I do not want to be long with this market at this time. And the 100 EMA above, we could turn on the 50 as well here. Just let me turn that on. There we go. So yeah, you can see the 50 is just up there. 12,524 is on the Nasdaq today. So I think that is a pretty suitable target. And we actually haven't even made it back for a test on the 50 in this downtrend as of yet. 20 EMA is always interesting to look at, really, as a baseline for long, or to be long above or short below. So I think, yeah, a couple of interesting things going on there technically in the Nasdaq. Just let me minimize this one. Yeah, and then oil. Well, where we sit, there's a few crazy people talking about oil. $70, here we come. Personally, I think those people are smoking crack, and I don't buy it. I don't buy it. I really don't buy that, to be honest. So, just let me minimize this chart and show you on the daily. Oh, lost that chart there for now. Yeah, here we are. So I think really, we've had, a lot of time up here, obviously above 100, but the market seems to be maturing from a technical sense and a value sense above this 103 area. Of course, it's above the invasion top of 93.53 back adjusted here on the August contract, the Q. But I think just what we've seen there last week, Wednesday, Thursday, Friday, big push up. I think today, fine. Strap into the rocket. Please return to your seats. I think we're going to be looking at 111 this week, easy. And I think within the next month we're going to be at 117s, easy peasy. So I just don't see the fundamental story for $70. I don't buy into demand destruction. Sorry, I just realized my camera was pointing at the wall there. I don't buy into the demand destruction at this price. I think demand destruction starts at $150 a barrel. We're not fully feeling the pain yet. We're in summer. People are driving. Goods are still being transported at a greater rate than ever. Really crazy amounts of air traffic. I just from a fundamental or technical point of view, $70 over the next 2 or 3 months. I just don't see it. I mean, and hey, if you do see it, write a comment in the comments below this video on YouTube, and I'd be interested to hear. But for now, I think the perma bull is still alive. All right, guys. Really, that's kind of it. It's a little bit. These markets are a little bit summer sleepy at the moment, I have to say. It's kind of a lot of traders probably off on holidays, so kind of not much going on. Well, there's not. It's kind of like funny, like where there's not much going on, but yet there's a lot going on. Under the hood, there's a lot of big, broad, fundamental stories happening. The Russian default, inflation. Is it going to be 75 or 50 basis point hikes from the Fed on the next one? We have ECB coming up with a 25 basis point hike early in July. There's a couple of broad tones there for sure. And COVID kind of quietly knocking on the back door, wanting to go for another breakout. So yeah. All right. Listen, I'll leave it there, and have a great session, and I'll talk to you soon. Cheers.